Hi, I'm Pankaj Gupta. Today's video is about stock market trading rules. Basis my trading experience, I firmly believe a trader need to put in place a set of rules or a set of guiding principles. Only then he or she can be successful in stock market trading. So in today's video, I will share my set of rules or my set of guiding principles which should help you in help you in your trading careers. So let's start with the first one. The first rule you need to define is what type of trader you are. Whether you are a day trader or a swing trader or a positional trader, because the skill set and competencies required for different type of tradings are different. So don't try to be, don't try to become, uh, uh, don't try to become a super trader. Try to become a particular type of trader, right? So define whether you want to be a day trader, swing trader, or a positional trader. And once you define that, don't switch. So you can't have a system that today you are a day trader, tomorrow you become a swing trader, and day after you become a positional trader, and 1 week down the line you keep on repeating this process. So if you switch frequently among trading types, you will not reach anywhere, you will actually get lost. Another rule is be a trader, don't become an investor, right? So when your trades are not going right, don't get into that brilliant idea that trades are not working, but not an issue. I have now become a long term investor. I will wait till my trades or till my positions uh, go into profit. So that approach is again not going to help you out, right? So if you trades are not working, accept them and take a corrective action. Be a trader, don't be an investor. Next, capital. Now you can bring in whatever capital, trading capital you want, right? That depends upon your financial status as well as risk appetite. So the only rule or the most important rule is you need to fix that capital. So let's say you need to fix your trading capital for a considerable longer period of time. So let's say you define 10 lakhs is your starting trading capital. So you keep that 10 lakhs as fixed for let's say 1 year, and after 1 year you review your trading performance, you review your returns, and then you decide that whether you want to increase or decrease your capital. So you need to freeze your initial trading capital, and there should not be any additions in that trading capital whatsoever may be the scenario, right? So just to be loud and clear, no additions in trading capital till it becomes zero. So I'm sorry, I have to use this line just to clarify in detail, clarify this point in greater detail. So withdraw profit, right? So whatever profit you have earned, that is a result of your hard work, time and energy you have put into stock market trading. So withdraw that profits periodically and enjoy them. Don't add your profit to your trading capital. So the rule here is simple. We keep a fixed trading capital whether we are into loss. If we go into loss, we don't increase. We keep on trading with the reduced capital. And if we are in profit, we withdraw that profits and keep on trading with the initially fixed amount of capital. Next, segments. So cash, future and options, three segments. So my strong recommendation is the trader should follow, or trader has to do option trading, because the returns in option trading are very high, and only these high returns can justify the time and effort we put into trading, right? Cash and futures are relatively, cash is a high cost, low return model, and futures is a medium cost and medium return model. So if you follow cash and futures, at some point of time, you will actually draw a conclusion that the returns are not good enough and it's not worth trading. So my experience is, to be successful in stock market trading, you have to do options trading. Now, certain points on trading parameters or trading dimensions. Position size. So you have to design your positions in a way that at any point of time, maximum loss in your running position should not exceed 5% of your trading capital. So we discussed about option trading. There are so many strategies we can follow where we can define the maximum loss we can take in a particular trade or a position. So you have to design your positions in such a way that at any point of time, maximum loss should not exceed 5% of your trading capital. Running trades. So that also depends upon what type of trader you are. For day trader, my rule says one trade is enough. For swing trader, maybe 2 or 3 trades, and for a positional trader, maybe up to 5 trades. Right trade setup. So you need to define your right trade setup. So basis my experience, right trade setup is actually a combination of chart pattern, support resistance levels, open interest, technical indicators, and overall global environments. And lastly, you need to hedge your position. So we discussed about option trading. So I don't recommend, I strongly recommend every trader to hedge their position. No point in taking unlimited loss strategy, because in spite of being doing everything right, we may still go wrong. So it's very important, or it's a must, to hedge your position, and we follow a defined risk strategy. Certain points on exits. uh, so what are the trade exit points? So first and the easiest one is profit target. So we took a trade, and that target has been achieved. So we basically book our profit and close that trade. Second exit is our stop loss has been hit. Third exit is that the trade is not moving anywhere, but somehow a reasonable time has passed. So I think, I feel, my rule says time SL is also a good exit point. And lastly, a little aggressive strategy or little aggressive principle, that I've taken a trade. Somehow it has gone against me, but I don't have a setup where I can take a reverse position. So since I follow a defined risk strategy, I know what's the maximum loss I can take in this trade. So I remain in that trade till I take a reverse position. So I don't book loss till I reverse. So that's certain points on trade exits. So, and just to sum up some of my golden rules. So the first one is follow rules till you change it. So you made a rule book, right? And there are certain rules written in that rule book. Please follow uh, every rule you have written till you change that rule, right? If you have if you have you know 10 rules in your rule book, please follow all those 10 rules till you remove one rule and you keep 9 rules, right? So no trade is better than wrong trade. So we discuss about right trade setup. You have to wait till your right trade setup is mature. Uh, you know, uh, Jumping on doubtful trades for sure. I mean, rest assured, if you take a doubtful trade, that will go into loss, right? So that's why I say no trade is better than wrong trades. Be sure to take a right trade. Uh, no chasing and no FOMO. Don't chase stock market, right? Whether on the upside or on the downside. If you chase, stock market will kill you. And don't have any FOMO, right? Fear of missing out. So there are enough number of trades available in stock market. Just wait for that right trade setup. Identify that this is my right trade setup and I want to take this trade. Uh, be a trader, don't be a bull or bear, right? So trader's job is to identify a trade, take that trade. Once the target is achieved, book that profit and be happy. Don't try to be in a camp of bull or bear. That is not going to lead you anywhere, right? And the last one, you will see lot of material on internet where people keep on suggesting newer and newer or complex option strategy which look very fancy. So I don't say those strategies are wrong, but every strategy has got their own risk and reward profile. You need to understand before you actually deploy that strategy. And the best way to understand the strategy is do a paper testing. So my rule book says don't deploy a new strategy unless you have paper tested it. So that's all about this video in terms of what should be the right set of rules or guiding principles for stock market trading. So hope you like this video. Any queries and questions, please feel free to contact me. Thank you. Thanks for watching.